Good afternoon, Bitcoin world. My name is Ian Gillespie, and today we will be discussing SmarterWeb's newest instrument, Smarter Converts, and the genius behind it. As always, this is not financial advice. Let's get started with the fundamentals of the Smarter Convert. The Smarter Convert is an interest-free loan that is denominated in Bitcoin, in which SmarterWeb gets $21 million dollars and will convert 100% of this into Bitcoin. Now, the investor, TOBAM, TOBAM, can either convert this into equity shares or they can get 98% of their Bitcoin back. Those are the two potential scenarios that could play out throughout this process. Now let's take a look at those scenarios. The first scenario, if it's converted into equity, which would be best for Smarter Web, this can only happen if the share price is 5% higher than the current share price at agreement, making this less dilutive for shareholders because it would have to convert only when the share price is higher. However, it would likely be converted when the price is far higher than this because it wouldn't really make sense for them to have this partnership, for Tobam, the investor, to have this partnership to only convert into equity when the share price is 5% higher. I think that would be very unlikely, and that equity would likely be converted when the share price is far greater than that. Additionally, after 6 months, if the share price is just over £6 or higher, SmarterWeb can force the loan to be converted into equity. Now, since the loan can only be converted into equity at a higher price, this allows SmarterWeb to raise more capital relative to the dilution, making it accretive dilution. So essentially, the whole mechanism that's in place, SmarterWeb pretty much designed this so that it's guaranteed to be accretive for shareholders, giving them more Bitcoin per share because the capital that can be raised to buy Bitcoin, their ability to multiply the Bitcoin holdings with this partnership, if converted into equity, would exceed the multiple in the shares that would be left outstanding if it were converted into equity. So this would pretty much just be a guaranteed win for SmarterWeb if it were to be converted into equity. Now let's take a look at the worst case scenario. The worst case scenario is that SmarterWeb only gets 2% of this loan that is turned into free Bitcoin. Oh no, free Bitcoin. So sad. And 98% of the Bitcoin acquired with the loan must be paid back. Since this loan is not denominated in fiat terms, it's denominated in Bitcoin terms, there's essentially no downside with this because SmarterWeb gets 2% of that Bitcoin back and just has to pay 98% of that Bitcoin back. They just get 2% free Bitcoin from that, even if Bitcoin's price goes down. So there's literally no losing scenario in this case. However, I would say there is one thing that could cause some potential issues if this were to happen. If a Smarter Web had to pay 98% of that Bitcoin back, then that could decline retail investor sentiment, which would compress the MNAV, making their capital efficiency decline because if MNAV is compressed, then when they go to dilute shareholders, they're able to raise less capital per share diluted since that MNAV is compressed, making their Bitcoin growth slow down a little bit. However, if this were to happen, I believe this would just be a temporary compression and then the MNAV would expand back up again. So I'd say there's no real reasonable downside. There could be a potential downside if that retail investor did decline. But I think a long-term outlook, there's no real downside in my opinion. And then additionally, I'd say this worst case scenario is very unlikely to happen. I think there's really two things that need to happen to pretty much guarantee that this loan will get converted into equity and that Smarter Web won't have to pay back any Bitcoin. These two things are A, will the price be above just a little over that £2 mark where they can convert it into equity? And then B, will Smarter Web outperform Bitcoin just by increasing its Bitcoin per share? If these two things happen, pretty much if Smarter Web outperforms Bitcoin by increasing its Bitcoin per share, I think this is pretty much just a guarantee that the loan will be converted into equity because if both of these can occur, there is absolutely no reason for that loan to be paid back. It makes no sense for their investor to get back that Bitcoin when they could be converting into equity as Smarter Web is significantly increasing their Bitcoin per share. In my opinion, based on all this information, this is an absolutely genius move to A, minimize risk and two, acquire more Bitcoin. It makes me only more bullish on Smarter Web. I'm already extremely bullish on Smarter Web, loving it even more now. That's all I have for you guys. Thank you so much for watching. If you like this video, if you like the videos I've been putting out, please consider liking and subscribing to support my work and to support the channel.